Hello trader, I'm going to do a complete multi-time frame analysis on gold. Let's see what kind of trading opportunity currently we have in this instrument. As you can see, gold is showing a significant trading opportunity in this highly volatile situation. Before we discuss how we can trade, let's look at the bigger picture to see the general direction in the market. Looking at monthly, from the monthly, we see that gold is strongly bullish market. If we look at overall picture, we see that from this monthly level of support, gold has this strong impulsive move to the upside, followed by this monthly correction. Now, with that monthly correction, we have seen that gold has come back to this monthly level of support where we saw that there was a weakless candle with a gap opening, and from that zone previous months we have seen that the market has broken this level of support, closed above, respecting this important level of support, creating a false breakout to the downside. Now, this month, once the market opened, we have seen that the bears tried to create a new lower low, but instead we have seen that there is a strong rejection from the bottom, giving a very strong momentum to the bulls, and the price now aggressively going up. If you closely look at, this is an overall bullish market and the bulls are in control, means that we could potentially see break of this monthly resistance or even creating a new higher high. So if you closely look at in all these four monthly candlestick pattern, we see that bullish candles are stronger than the bearish. So we can expect from the higher time frame perspective gold to give us potential bullish trading opportunity. If we look at the weekly time frame, we can see that this market showing a very strong bullish momentum as well. There is an inverted head and shoulder, we can see it is very clearly visible in this level on the weekly perspective. Now, previous week we saw this pin bar from this weekly level of support which acted here as a resistance, which is acting here as a support, and this is a very strong bull market. Resistance acting support, grab liquidity, and the bulls has got enough fuel for pushing that price high. Now, this is the current weekly candle. We saw that in the beginning of trading week there was a strong momentum. As a result, we saw that there is a gap opening from this another important level of support. Now you can see that this market open on a strong liquidity zone. On the weekly, there is a strong weekly strong support here, and also there is a weekly doji opening and closing zone, very strong level of support, and the price has formed in that level, means that this weekly candle might be very strongly bullish. Now, at the same time, if we look at the past, we see that from that kind of support, when the price open with this kind of strong bullish momentum, we see a full healthy green candle. And with that being said, this weekly candle can give us in the similar kind of price action. Now, at the same time, we see that this candle already is almost at the top. So what we can expect later today, some lower time frame retracement can give us potential opportunity to buy again, as we see that this market is strongly bullish and we can expect couple of even weekly candle to the upside. So monthly, weekly, gold is significantly bullish. Now, looking at daily, we see that from the daily there is a very strong impulse on the daily, followed by this correction, and then we have seen another impulse to the upside, which is a typical uptrending market structure. And we have seen that there was a strong liquidity grab from this zone here as well. The price tried to break this trend line. From this trend line has gone up with this daily impulse and later we have seen that there was a drop. This is a clear liquidity grab from this movement, giving gold a new momentum to the upside. Now, what we have seen that after this momentum there was a narrow doji, followed by a middleman. Now, this middleman giving another strong momentum for gold to push to the upside. As you can see, this daily middleman has a false breakout of this level, of this narrow doji, created an overextended to the downside and then closed as a strong bullish candle that has a long wick at the top and also long wick at the bottom. And as a result, we saw that there was a doji previous day, which is also significantly bullish. Then how we can find trading opportunity? There are two probability now: is gold to continue to rise from here, as we see that a big bullish candle followed by a doji is a continuation pattern. There is another probability is, as you can see, this is the daily doji that already tested the upper of this long week of this daily doji. The lower part has not been tested. We could potentially see a retest of this lower part of this daily doji later today. Either we could see a strong momentum from here to the upside to test this high, or we could see a retest of this level and then continuation to the upside. So let's see for the lower time frame to see which one is likely to happen. Now, as you can see from the intraday perspective, we see that today the market opened with a gap, and we see this is the dotted line that we are expecting on the daily time frame the price to go ahead and test this zone, where we see there is a 4-hour 20 EMA giving a very strong liquidity for gold to be tested. So what we can expect at some point later today, if gold managed to drop to this level and giving a strong momentum from this zone on the lower time frame, we will consider going long on gold with a high probability trade setup. On the other hand, if we see that gold could not break this local structure due to strong momentum in that zone, once we will see any kind of false breakout or a strong liquidity gap, especially on the 1 hour chart along this zone, we'll consider going long on gold with a high probability trade setup with our students. Now, if you find value in this analysis, then smash the like button and also drop a comment below to help this idea. Let us know which way you are trading gold. Thank you. I'll see you soon in my next analysis.